This is Bob, and he's got a huge problem. Bob just realized the entire herd has been grazing on imaginary grass. The prize bulls convinced everyone the pasture was infinite. They bundled worthless hay into premium feed, sold it to every cow on the planet, and bet billions of bullions that it would all work out fine. Now the music stopped, the grass is gone, and Bob's looking at the biggest stampede in modern history. This is the 2008 financial crisis explained. Not the version they taught you in school. Not the sanitized documentary version. This is what actually happened when Wall Street Meadow discovered that infinite grazing wasn't a business model. It was a time bomb. Think of it like this. You're a working cow on Wall Street Meadow. Every day you graze a little, save a few bullions. Try to buy yourself a decent patch of grass to call home. Simple enough, but the prize bulls running the pasture had a different idea. They realized something. If you can convince cows to borrow bullions to buy grass, you can sell way more grass. And if you package those grass Iowas into fancy bundles called mortgage-backed hay bales, you can sell them to other pastures. And if you bet on whether those hay bales will succeed or fail, you can make even more bullions. It's brilliant. Until someone asks, wait, what happens if the cows can't repay the Iowas? The prize bulls had an answer. Don't worry, grass prices always go up. Except they don't. They never do. Forever. But by the time anyone figured that out, the entire global herd had bought into the system. Banks in Europe owned American grass Iowas. Pension funds bet their calves' futures on bundled hay. And Bob just wanted a small patch of pasture to call his own. Here's how it was supposed to work, legitimately. A working cow wants to buy grass. They go to a grazing bank. Prove they can afford the monthly hay payments. Get a loan. The bank keeps that IOU, collects interest. Everyone wins. For decades, this worked fine. Boring, stable, predictable. Then, in the late 1990s, the pasture changed. Banks realized they didn't have to keep the IOUs anymore. They could bundle hundreds of grass loans together, stamp them grade A premium hay, and sell them to investors. This was called securitization. Suddenly, the bank's risk disappeared the moment they sold the bundle, so they stopped caring whether the cow could actually repay. Why would they? They're not holding the risk anymore. So they started giving Iowas to anyone. No savings? No problem. No income? Even better. Here's a ninja loan. No income, no job, no assets. Sound familiar? It should. Unemployed calf wants a luxury meadow? Approved. The bank makes the loan, sells it immediately, pockets the fee. Someone else holds the risk. And who bought these bundled Iowas? Pension funds, insurance companies, foreign banks. They trusted the stamp AAA-rated premium hay. After all, the rating agencies, who were paid by the very banks creating these bundles, said they were safe. Funny how that works out. Here's where it gets worse. Way worse. By 2007, American cows owed 10 trillion bullions in grass Iowas. Not million, not billion, trillion. The entire mortgage market had become the largest speculative grazing ground in history. And most of it was bundled into securities nobody actually understood. The prize bulls weren't just selling these bundles, they were betting against them. Investment banks like Goldman Sachs created mortgage-backed hay bales, sold them to clients, then bought insurance bets that those same bales would fail. They were selling manure and betting it would stink. And when it did, they collected twice. Banks borrowed bullions to create more loans. They sold those loans to investors. Those investors borrowed bullions to buy more bundles. The banks used that cash to make even more loans to even less qualified cows. It was a closed loop. Money wasn't creating value, It was just spinning faster and faster, and everyone pretended that meant growth. As long as grass prices went up, it worked. Cow can't pay? No problem. Sell the grass for more than the original loan. But the system required prices to rise forever. The moment they stopped, the entire cycle reversed. Foreclosures flooded the market. Grass prices dropped. More cows defaulted. Prices dropped further. The very mechanism that made billions on the way up now destroyed trillions on the way down. This wasn't just America's problem. European banks held billions in American mortgage bundles. Asian pension funds bet on Wall Street Meadow's eternal growth. When Lehman Brothers, one of the largest grazing banks, collapsed in September 2008, the stampede went global. Iceland's entire banking system failed. Ireland had to bail out its banks with money it didn't have. The whole herd was connected. And this wasn't new. The same thing happened in 1929. Speculative frenzy. Borrowed bullions fueling imaginary growth. Everyone convinced, this time is different. Then reality arrived, and the prize bulls who caused it walked away clean, while working cows lost everything. History doesn't repeat, but it rhymes. And Bob had heard this song before. By mid-2008, even the prize bulls knew it was over. But they couldn't stop it. The bundles were everywhere. Nobody knew which ones were toxic. Trust evaporated. Banks stopped lending to each other. The global financial system, built on trust and borrowed bullions, seized up like an engine without oil. And there was no brake, no emergency stop. Just the terrifying realization that the stampede had already begun. So what happened to the working cow? 8.7 million cows lost their grass. Foreclosure notices arrived. Families evicted. Life savings? Gone. Unemployment hit 10%. Calves graduated into a pasture with no grazing opportunities. Retirement funds evaporated. Your parents, your neighbors, your future, shredded. Because a few prize bulls wanted bigger bonuses. And the prize bulls? Bank of America got $45 billion in bailout hay. Citigroup got $476 billion in government guarantees. AIG, $182 billion. The same institutions that created the crisis got rescued with your bullions. Meanwhile, 10 million working cows lost their homes. Oh, and the executives? Most kept their jobs. Some even got bonuses for navigating the crisis. 0 went to the slaughterhouse. The system failed, but the individuals running it, they landed softly. You lost your grass. They got a bailout. The global economy shrank by trillions. Entire nations went into debt to save private banks. Austerity programs cut services for working cows, while prize bulls returned to profit within 2 years. By 2010, Wall Street Meadow was posting record earnings again. And Bob? Bob's doing just fine. Thanks for asking. Here's what Bob learned. The system didn't break by accident. It was built to do exactly what it did. Transfer risk from prize bulls to working cows. Privatize profits. Socialize losses. When you reward reckless grazing and punish cautious saving, you get a stampede. Every time. They told you it was a once-in-a-century event. They told you regulations would prevent it from happening again. They told you the system learned its lesson. But the prize bulls who caused it are still running the pasture. The working cows who lost everything are still rebuilding. And the same incentives, borrow, bundle, bet, repeat, are still in place. The real question isn't if this matters, it's how long until the next stampede.